When banks deny loans to ordinary people, where do they go? Most probably to microfinance institutions and NBFCs. But instead of relief, what they find is a trap: higher interest rates, hidden charges, and relentless recovery practices. Those who suffer the most are the poor and marginalized, who are left with no option but to borrow in desperation. This silent crisis, rarely spoken about in India, is pushing families deeper into debt and despair. In this week's In Public Interest, I spoke to Thomas Franco, ex-General Secretary of All India Bank Officers Confederation, on how banks are pushing gullible consumers towards microfinance and NBFCs and how these institutions are fleecing the poor. Why is this crisis being ignored, and what can be done to protect the most vulnerable from predatory lending? This month on In Public Interest, we are taking up the issues in the banking sector, from corporate loan write-offs to issues related to microfinancing institutions, levying of GST on penalty payments, the issues faced by people due to CIBIL score, and the role of Reserve Bank of India in protecting, or rather failing, the interest of the consumers. If you like our work and if you want us to continue, do support us by becoming a paid subscriber of the News Minute or click the link in the description to contribute to our reporting fund. So thank you so much for talking to us. What exactly is happening across the country because of these microfinance and non-banking finance institutions? There are multiple reports that are multiple reports that say that people are being pushed into debt traps.
It's very much true that the small credit availability has become very difficult for people. This historically what has happened if we analyze. Before 1969, the first round of nationalization which happened on 14 July 1969, before that, credit was not available to ordinary people. There was a report which said that out of the total advances, only 2% of the loans were given to farmers. At a point of time when almost 80% of the economy was dependent on farming. Now, after 69, the Government of India and the RBI together brought out many policies. They brought in a scheme called the priority sector lending, under which 40% of the loan has to go for small industries, weaker section, farms. 18% of the total advances should go to agriculture alone. And if we analyze the data from Reserve Bank of India itself, every year RBI provides a data which is quarterly data and an annual report is there, called the BSR data, Basic Statistical Return 1 and 2. In this report, if we see what was there in 1970, 80, 90, like that, every 10 years if we see, 70 to 90, the small credit was increasing drastically. Rural branches were increasing tremendously. Credit deposit ratio across the country was increasing. Those days there was a report saying that there are states which are called Bimaru states. Bihar, Madhya Pradesh, Rajasthan, UP. Bimaru in Hindi is sickness.
Sick state.
Sickness.
Yeah.
So, these states, the credit deposit ratio was very less, but they were given priority. Then the government brought in a scheme called lead bank scheme. Each bank was given responsibility of different districts. Like for example, State Bank of India was given responsibility of most of the Northeast, the most backward areas. They were asked to develop those areas through deposit mobilization as well as providing credit.
Small credit.
Small credit. So if you see in 1980, 99% of the credits were less than 10,000 rupees. That kind of small loans were given. Then later on, they changed the small credit criteria itself. Instead of 10,000, now it is made 25,000. Till 90, this pattern was continuing. Large number of loans were given to small people, smaller loans, small amount, and there was a program called Integrated Rural Development Program, IRDP, under which the rural areas, weaker section of the society was focused. They were given credit for buying goat, cow, tailoring units, small shops, petty traders, all this they were given credit. It made a tremendous change. And there is a report called India Social Development Report which showed that between 70 and 90, income inequality had gone down. The main credit goes to the banks, public sector banks who were giving these loans. 90, the liberalization, privatization, globalization policy came in. 1992, there was a report called the Narasimham Committee report, which said that banks are for profit. Why you have to concentrate on these small loans? You focus on larger loans. He even recommended that this priority sector lending should be slowly wiped out. Government could not do it because of the resistance from the trade unions and the progressive forces in the country. He recommended outright privatization of banks. Till now, they could not do it because of the resistance from the trade unions and the public as a whole.
General public trust public sector banks.
Even today, they trust the public sector banks for deposits. We are seeing every year report. No public sector bank is
seeing withdrawal of deposits.
Withdrawal of deposits, it's not taking place. We have seen in the case of once ICICI, there was a rumor that ICICI is going to collapse. People were rushing to their ATMs and withdrawing money. RBI and government asked the State Bank to pump in any amount of money to ICICI. We did it and saved ICICI, but it has not happened with any public sector bank so far. Though just say 8 years back, the government itself said that 10 of the public sector banks are doing very badly, they are going to be sick and all. But nothing happened. From the All India Bank Officers Confederation, we brought out 3 reports. Laudable performance of public sector banks and tremendous performance of public sector banks, and we brought out a turnaround plan for all these 10 banks which were identified and how it can be done. Today, all banks are making profit. But what has happened is the small credits have gone down.
What could be the percentage?
Now, 2025 RBI report. Small loans, I am taking less than 2 lakhs, not 25,000. It has come down to 70%. From 99%, slowly it has gone down, and slowly the corporate credit has gone up. And because of that, the people are not getting the public sector loan. They are forced to go to the non-banking financial companies and the microfinance institutions, whom I would call modern day money lenders.
So the formal banking system does not think that a small trader or a person who does business on his own worthy of getting a loan, credit from the bank?
No, it's not that.
Hmm.
The banking system has undergone a tremendous change in the staffing pattern.
Hmm.
The number of staff is going down steadily in the public sector. It is steadily increasing in the private sector banks. The number of branches, I'll tell you the statistics. In 69, when nationalization took place, only 18% of the branches were rural branches. In 90s, it became 60%. 60% of the total branches were in rural areas.
Hmm.
But now, once again, it has gone down to 29%. So, in the rural areas, access to credit, access to bank branches has gone down. That's one side. Second, the staffing pattern. The business in 10 years, say it has tripled. So, naturally, the staff structure should also
Go up
to 3 times, but it has actually reduced. RBI data, I have the exact figures I can tell you. So, what happens is you are not able to cater to the large number of small borrowers. Practically, I am telling you, I was branch manager of different branches, 3 branches. When I had 4 field officers, I sent them to the market. Find out who are the shopkeepers who have not taken loan.
So you look out for potential loan seekers.
Yes. Even vegetable vendors. We started giving loan from 10,000 rupees, 50,000 rupees, 1 lakh, 2 lakhs. When this field officer strength came down to 2, going back, again it was reduced to 1. My target for the year was 100 crore loan. Naturally, I find it easier to give 100 people 1 crore instead of 10,000 people. So, naturally, the small credit went down. And today, except for the government-sponsored schemes, like the Mudra loan, PM Swanidhi, gold loans, which is 100% secure, and to some extent this Kisan credit card for the farmers, where again it is only renewal of the limit and not new loans. That continues. That is how still 70% of the loans are small loans. But same time, the corporates were given loans at very easy terms. Why I am saying easy terms? There are more than 440 borrowers with loan limit above 100 crores who are getting loans at less than 5% RBI data. So now what has happened is the economy is shrinking. The purchasing power of the people are going down. So what they are doing? They are going where they can get a easy loan.
That is microfinance.
That is the microfinance. They are registered as microfinance institutions or non-banking financial companies. Now, where do they get money? Banks get money from the depositors. But these NBFCs, MFIs, they collect money, take loan from the public sector banks, private sector banks, and then they are doing a lending. And 2 years back, Reserve Bank removed the interest ceiling. So now they can charge any kind of interest. I'll tell you a report of an organization called Local Circles, which says that 45% of the small loans is given as 25%. 10% of the loan, 50 to 100%.
interest rate,
interest rate.
which is absolutely shocking.
Yes, 20% of the loans above 100%, going up to even 200%. See, these are shocks, Shylocks. You are badly in need of money, you don't have security. Okay, I am giving you money, but you pay this much.
Earlier, what was the cap when it comes
Earlier,
to
the Reserve Bank was regularly controlling the interest rate, including deposit interest rate and loan interest rates. And except for credit cards, the other loans, the banks were not charging more than 18% anywhere. Now that ceiling has been removed, and for non-banking financial companies also, it is removed. Earlier, they had some ceiling of 24%. Now, they are charging left and right whatever they want. RBI says it is up to the board of that non-banking financial company to decide what they should charge.
this is as good as Kanduveddi types.
Exactly, that is what is happening. And there are various studies which have shown, including the data given by the Reserve Bank. Reserve Bank periodically publishes a report called Financial Stability Report. The latest report says less than 50,000 loan taken by people of this country, 84% of that is provided by only the non-banking financial companies and the MFIs. So that clearly shows that banks are not able to give small loans. People are going there.
So the formal banking system does not entertain people to, come and get loans, or
Not all. They're,
entertaining corporates.
yes, one side they are entertaining corporates and large loans because of the reduction in staff. Another side, these companies, non-banking financial companies have flourished. They were not eligible for loan from banks. There was a principle called you cannot lend for on lending. That was changed.
Like, can you explain that? Like, you cannot lend for lending.
Yes, suppose
Huh.
you are a pawnbroker. You have got some jewels. You are not supposed to come to a bank and take a loan. Because
Mortgage those jewels and take loans.
yeah, the principle was simple. You can give loan only for productive purpose, not for lending to somebody else. This has been changed. Reserve Bank itself has changed the policy. And Reserve Bank has brought these loans of NBFCs, MFIs under the priority sector lending also. So banks are happy to give to them easy. You don't have to follow up with every borrower. You give to one big company, they are giving to thousands.
This is like outsourcing or MLM marketing.
Exactly, that is what is happening. So now what has happened is they have started using coercive methods of recovery. One side is high rate of interest. Second is coercive methods of recovery.
Before going into that, because that's a very important aspect that I want to talk about, but you gave me some numbers saying, there are people who are being charged 50% of interest rate or 100% or in some cases 200%.
Yes.
Like, who are these people who are taking these loans from small finance institutions, non-banking finance institutions? Who are these people?
These are daily traders mostly. I have seen earlier also. In a particular market, a lady comes with only one basket, empty basket, goes to the moneylender standing there. He will write down loan 500 rupees. But he will pay her only 400 rupees. With that 400 rupees, she buys from a wholesaler some fruits, some vegetables. Then she goes outside the market, sits on the floor, spreads out small, and keeps on shouting, Patrua, 10 rupee, 10 taka, like that. And she is able to sell. The evening, she goes back to that money lender and pays 500 rupees. So for 400 rupees per day, 100 rupee was the interest. So you calculate it for 365 days. This is the type of loan, once again, now it has come. This vanished when banks were freely giving loan for small
Loans, for
Yes.
small loans banks
Yes.
were giving. Now, can you, as a banker, can you just explain to us this 50% or 200% in terms of rupees? What would be the amount? Like you gave an example of 500 rupees.
Yeah.
Can you tell us for 200 rupees what would be the amount?
See, the loans given these days are not that small.
Correct.
So say 10,000 rupees is a loan. So if you are charging 100% per year for that 10,000, you are going to pay another 10,000. Double the amount. But still, a small shopkeeper, a vendor, he finds it safe because he doesn't have money.
He's desperate.
Desperate. So at least even after paying this, he will be able to make a small margin and survive. This is only a survival strategy for people. And if they fail in the business or there is some crisis in the family, sickness, the system collapses. He is not able to sell, the business ends, and these people jump on them.
Now, this is where the debt recovery comes in. Like you said, the way they use coercive actions. Now, you have done a field report, you have gone to villages, you have gone spoken to people. What is their experience about these microfinances, the manner in which they operate on ground?
Well, actually, All India Democratic Women's Association has done a study for which I was helping them with a format, and that study has been done across 20 states in the country. The information available is alarming. They want some money, they give a house document. And they get, say, 1 lakh, 2 lakh rupees. The interest rate is so high that when they start repaying, they are only paying the interest and the principal is not coming down. And it reaches a stage, they find it difficult further. That fellow has the document, he sells out the cows, chases you out. That is one method. Second is they have agents, collection agents. They go house to house. They shout at them, scream at them, abuse them, use bad words. That is the second type. The third is the fintech companies which have come. They offer you in the social media easy terms, loan in 24 hours.
No, now there are loan apps that give in minutes.
Minutes also.
Huh.
So there, without knowing what you are signing, whatever they are asking to sign, you sign and give. And there have been reports, they abuse them, they follow them in the social media, they morph their photographs, especially the ladies' photographs, show obscene pictures. This has led to suicide. This has happened in Tamil Nadu. When Mr. Sailendra Babu was the DGP, he made a public address that like this apps are misusing their powers and they are not authorized, but still they are approaching people and charging heavy interest, leading to suicides. So please be careful. Same kind of an address was done by the DGP of Gujarat. At Ahmedabad, he made public statement. Don't get lured by these fintech companies. But it is still happening because you are desperate. You want money urgently. You want money for your child's education. You want money for your medical expense of somebody in the family. Nobody else is willing to give. So you go to them. Earlier, I remember I told you about the integrated rural development program. While giving loan itself, there was a provision that for consumption expenses for the family. That also could be added in the loan appraisal itself. But now, these are not available to people. So people are forced to go to these money shocks.
So how big is this crisis, sir?
See, the crisis, when we see the study in a village, especially in the rural areas, 30-40% of the people are totally indebted.
In one village, 30 to 40 people. That's a huge number, it must be.
And they are only paying interest on the loans. They are not able to pay back the principal. Sometimes even that they find it difficult. They go to another company. There are so many operating.
So to pay one loan, they will take another loan from another company or they will go to private money lenders.
We have seen that one person has taken loan from 8 different companies, taking from here, paying back, taking from there, giving to this. Like this, a cycle is going on. They are into a debt trap.
Then how will you come out of it? What is the solution?
The only way is the government to operate. Now, for example, Tamil Nadu government has brought a bill in the assembly. They have clearly laid out that extortion cannot take place. High rate of interest should not be there, though they have not put a ceiling on what can be done. Earlier in 2011 itself, Andhra Pradesh brought out a bill because there were huge
Number of suicides
there. So immediately they brought out a bill. They made a very good mechanism. You could go and complain at the block level itself. The district rural development officer is there. DRDA agency was there. Under them, the block development officers were there. So nearest block, you can go and complain that I took this loan, this is the problem I am facing. And they will come to your rescue. And that time they had put an interest ceiling also, that you cannot charge more than, that itself was high. They said, let's say 10,000 is the loan. You cannot charge even over a period of time more than another 10,000. That ceiling was there. But now what has happened is, the Reserve Bank of India intervened and said that, okay, you can do all that at your level because money lending is supposed to be under the state
subject, concurrent list.
Yeah. So now it is under the state list, not even in the concurrent list. But the Reserve Bank of India has started registering non-banking financial companies with them. So they say that those who are registered with us, you cannot monitor or supervise.
So they have full freedom to operate the way they want.
Yes.
They can charge exorbitant interest rates. Nobody is going to monitor them. Nobody is going to oversee.
Yes.
Not even RBI.
RBI does not have manpower to do that. And now what they have found out a new like the haircut in loan
For
write-off.
corporate loans.
Here they have come out with an organization called self-regulatory organization. You will regulate yourself.
The money
So-
lenders will have to
Well,
regulate themselves.
So there are two networks called one is MFIN, another is Sadhan. These two are supposed to be network of money lenders. So I used to say that this is like murderers getting together and deciding how less painful the murder should be. That kind of a decision these people take. Now they are demanding to the government that you bring a credit guarantee scheme from the government so that if our loan does not come back, we can get it from the Credit Guarantee Corporation.
Okay.
And they also don't have any mechanism to monitor at the grassroots. So they are free to do whatever they want.
Now, my question is, like, if you travel to the rural areas of Tamil Nadu, even in Andhra Pradesh or Karnataka, in various places, we could see all these small and microfinance institutions. How easy is it for a person to start these institutions?
Now it has become very easy. A non-banking financial company, to register, you require 5 crores. So any big businessman will have. And earlier, corporates were not allowed to start banks. Now they are not starting banks, but they are starting non-banking financial companies like Mahendra Finance,
Kotak Finance.
Kotak Finance, Bajaj Finance, Adani Finance, Adani Capital. So these companies, though they are corporate, they are called as non-banking financial companies, small money lenders. They very easily, say Adani to deposit, have a capital of, even that you are putting in the bank, you are not giving it to RBI. 5 crore capital, you start a company. Tatas have a Tata Finance. So these companies can easily get a license and absolutely no monitoring except this self-regulatory organization. And they charge what they want. And very often what happens is the company may have a term that, okay, we'll charge only this interest. But their agents are there. They collect money as service charge, loan sanction charges, recovery charges. During the Wayanad disaster, I was in Wayanad. There are a lot of people, exactly as per a survey, there were 102 jeep drivers. Wayanad had a lot of...
Yeah.
So they will take a loan, buy a jeep, pick up the tourists, take them around for a day, drop them back. They were getting a good earning. Now, because of the disaster, the entire business collapsed. And we did a survey of debt there, and we found that all of them had taken loan only from non-banking financial company. Not a single bank had given a loan. And no
because banks rejected their loan applications?
Naturally. One is, as I told you, access to credit for small borrowers has come down. Whereas these people are operative in every village. So it is easy to approach them. For them it is very safe because the vehicle is mortgaged to you. So anytime you seize the vehicle, auction it, you get back the money. I have seen in the case of taxi drivers in Chennai itself. Once consciously, whenever I was traveling in taxi, I was talking to the driver. Have you taken a loan? Yes. Where did you take it? Invariably, SRM Finance, this finance. Not a single driver was saying that I could take a loan from a
Canara Bank, SBI,
but which existed during my days when I was in the bank for 39 years.
So where is this all leading to?
This is leading to a situation where the purpose of nationalization has been defeated. The purpose when Mrs. Gandhi announced was to reach banking for every person in the country. Whereas now it is
No, but that has Modi has achieved that. There is digital India. We are doing phone pay, GPay. India is developed because we are a nation that is paying via GPay. Then we have this Jandhan accounts.
Yeah,
So many crores.
I'll tell you
Banking
about
is all like everywhere.
Access to credit and access to banking are different. Just because you have opened a Jandhan account, that does not mean that you are going to get a loan. Yesterday in the parliament, it is disclosed that 27% of the Jandhan accounts have become inoperative because people have no money to deposit there, and those loans with zero balance, it is remaining like that or getting closed.
Dormant.
So, the financial inclusion should actually provide credit to you.
People should have money in their hands, right?
Yes. And especially now, we are getting into a kind of an economic crisis.
No, you talked about economic inequality, which is increasing. Because we could see reports which talks about economic inequality, which is growing in India.
Yeah.
So this is all part of that crisis. This is all the build up towards that.
Exactly. Number one, because you are not having access to credit and you are in need of money, your income is low, you are going and borrowing, paying higher rate of interest. So your livelihood expenses has to be reduced. There are surveys showing that the consumption, people are taking loan for consumption, not for any productive economic activity. On the other hand, I would like to come back to the recovery part, coercive mothers. Few examples I want to tell you. In Kadalur, mother had taken a loan. The recovery agent goes and abuses the daughter, shouts, and telling her, if you cannot repay the loan, send your daughter with me. This has happened. And in Hazaribagh, in Jharkhand, a young girl called Monica, her father had taken a tractor loan. He had paid most of it. He had just 60,000 outstanding. But these recovery agents came. They were shouting. They were trying to take away the tractor. They started driving the tractor. To stop this girl ran and stood in front, thinking that she is able to stop. They did not bother. They drove the tractor above her. She died on the spot. It is there in the newspaper. And this loan was given by a company called Mahindra Finance. And another case, one person called Tarun, he was an employee of Bajaj Finance. The recovery, he could not achieve the target because people did not have capacity to repay. But from above, the company was putting pressure on him. He has written a suicide note that I am not able to tolerate anymore. I have been troubling people so much to repay the loan, and I am seeing their condition. I have decided to take my life. With a suicide note, he commits suicide. Like this, things are happening. Only few get reported in the media. Many do not get reported at all. In spite of that, National Crime Records Bureau says that the suicides due to credit is increasing. So this is an alarming situation which is coming in the country, which the government or Reserve Bank is not taking care of so far.
So now, what needs to be done, sir? Like now that the government is aware of what's happening, I'm sure that they are aware, the RBI and others. What needs to be done, sir?
Number one, they should bring back the concept of nationalization in practice. The priority sector lending, which has been diluted, has to be taken back. For example, direct credit to agriculture, there was a target. Now, direct and indirect are integrated together. So, you don't have to give loan for a farmer. You can give a loan for a processing unit, say mango processing unit. That is also considered as agricultural loan and it is also priority sector. So, that kind of norms which they have changed. Similarly, SSI, the amount of investment has been increased. So, naturally, bigger borrower gets a loan. So, these norms have to be reversed, number one. Number two, there is a need for doubling or tripling the number of bank branches, public sector branches, especially in the semi-urban and rural areas. Number three, the Reserve Bank should once again resume its original work, that it will control the interest rate. For the deposit, you pay this much. For the loans, you can charge only up to this. Number four, the non-banking financial companies should not be given loan by the public sector banks or private banks. Let them mobilize their own money and invest. Let them recover. Last, the state government should be empowered. Even if it is non-banking financial company or MFI registered with RBI, the state government should have control over them within their state. They should be able to monitor them. Like Tamil Nadu Act alone, Mr. Udayanidhi Stalin, when he presented it, NBFC was included. But when finally it was passed, he made an announcement that Reserve Bank says that you cannot control over this, but we are making an amendment that even for non-banking financial companies and MFIs, if they are using coercive methods, state government will take action.
State government can also, recommend the RBI to cancel their licenses or something like that.
So, what I say is that instead of supporting the minuscule minority, government and RBI changes its policy towards the majority who are in need of credit, who are in need of reasonable rate of interest. This only the government and RBI can do and they should do.
Right, sir. Thank you so much for joining us and giving us insights about the kind of situation that we are in, the kind of silent crisis that the country is witnessing. Thank you so much, sir.
Thank you.